Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. An indecisive doji cross yesterday as the market, once reaching the significant bright red, slowly declining head and shoulders neckline of the July 2017 to November 2018 move, currently at 109.83. Well, once it reached there, it has decided that it hasn't decided if it wishes to continue to move lower or not. I suspect the influence just below the 50% Fibonacci line of the January 2021 to September 22 move at 109.44, plus the rising mauve highlighted medium moving average currently at 109.32, may be the impetus for any move back up. We nevertheless have now two consecutive closes below the bright red neckline, and as I previously stated, I regard this as a proxy for the neckline, with the mid-August to date action being an even eve double top. Thus I feel obliged to lay out a primary target X, which is in the 108.88 zone, with a secondary harder to reach target X1 down in the 107.91 zone. Now I'm not wholly convinced prices are ready just yet to head down there. But so far today, a reactionary limited move higher, up over the bright red neckline but barely grazing over it. Cable, aka sterling against the US dollar. A fifth bearish black crow as prices continue to follow on lower, sometimes erratically, from the recent bearish engulfing pattern. Prices this time opened and closed below the dark blue lower time, currently at 131.41, of the late June to early August bullish Andrews pitchfork, having been capped by the dark blue lower time, along with the combination of the July 2023 high at 131.44, the December 2020 low at 131.33, whilst at the same time being supported by the green short medium moving average below, currently at 130.66. That is the next support below. I'm wondering how well this green short medium moving average may support the market, as below this the next support is last month's low at 129.99, and then the rising medium moving average, currently 129.34. So far today, a small reactionary move back up, based on that green short medium moving average right now, but not as yet testing towards the breached dark blue lower time. Euro sterling. An immediate countering bullish harami yesterday after the previous session's bullish engulfing pattern. Prices closed back up over the July 2024 low at 83.81. Let me get that right, 83.81, and the further congestion at 83.86 that caused the low in July in the first place. However, the market pulled back from testing the next overhead resistance, probably because of its size, and that's the congestion at 84.05 that stretches up to the very recent lesser Fibonacci line at 84.29, and even higher up towards the declining short medium moving average, currently at 84.45. Prices now appear no longer under much, if any, influence from the narrow, broken, recent August-based descending wedge pattern, and may be building a new pattern right now. It also puts on notice for retirement target X down at 82.50. This was the earlier target for the August to very early October bearish half rotation. I'll probably retire it after this commentary. Now, so far today, a further attempt higher towards the congestion that starts at 84.05, but not breaching it as yet. US dollar against the Japanese yen. An immediate countering bearish harami, if only just, and also a possible two-day tweezer top after the previous session's unusual key reversal up. The cap seems to have been a combination of the lesser Fibonacci line at 148.68, which was breached, and the 50% Fibonacci line of the July 23 to July 24 move at 149.61, which was not breached. It nevertheless is still a clear move up and away from the break of the dark blue neckline, currently at 146.24, of the newly acquired, if lopsided, mid-August to early October reverse head and shoulders bottom that was originally masking as a possible bearish halfway hesitation. This pattern now gives potential targets of a primary target X in the 151.48 area, with a secondary harder to reach target X1 up in the 153.60 area. The market would have to overcome some considerable resistances topside, apart from the ones already mentioned, notably the gold flatlining long moving average, currently 151.48, the declining medium moving average, currently 151.38, and the bright red shallow middle time, currently 152.28, of the late December 2023 to early August 24 bullish shift pitchfork. The only other thing to bear in mind is the weekly key reversal the market made last week, and that was a weekly key reversal up. So far today, a lower follow-on from the open, but not very far in relative terms and looking like a possible hammer pattern right now. US dollar against the CNH, the offshore Chinese yuan. A bearish dark cloud cover pattern yesterday after the recent run-up. Prices were capped for a second session by the recent lesser Fibonacci line at 709.99, a drop down below the combination of the June 2023 low at 706.57 and the very recent mid-September base broken downtrend, currently 706 even, but failed to close below either. The recent actions allowed me to draw a new dark blue highlighted mid-September to early October based bearish shift pitchfork. The market is currently in between the upper time above, which is at 702.76, and the middle time below, currently at 709.96. It is a bit presumptive move on my part, but I'm hoping this pitchfork might provide an idea for the bearish angle of attack of this market if it chooses to go that way. So far today, a further move lower, below the June 23 low and broken downtrend. The next support is the 50% Fibonacci line of the October 2022 to January 2023 move at 706.57. US dollar against the Mexican peso. An indecisive doji cross yesterday as the market is still contemplating either taking things lower below the quite interesting and congested support provided by the dark blue lower time, currently at 1935.02, of the recent mid-August to mid-September bullish shift pitchfork, which ties in with the purple neckline at the same level of the late July to late September lopsided head and shoulders pattern, plus the bright red lower time, currently also at 1935.02, of the very important big picture April to July bullish shift pitchfork. And enmeshed with all these is the rising green short medium moving average, currently 1930.15. So altogether quite a congestion within a very narrow range. Now just below these is the 50% Fibonacci line November 20 to April 2024 move at 1920.38 and the March 2020 low at 1915.03, whilst above is congestion at 1940.68 and the 2021 low at 1953.63. All this is in the shadow of last week's weekly key reversal down. Just in case, I've placed potential targets below for a breakdown through the purple neckline of a primary target X in the 1865.15 zone, for a secondary hard to reach target X1 in the 1802.10 zone. I'm not sure about these, even if I have placed them on my daily chart, I'm still not sure about them. And so far today, a little higher, but still clogged within the congestion area before coming back down again. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.